my unashamed goal is really to own everything and operate nothing, right? I don't want to be an operator in the business. Okay, we're doing oil and gas, we're doing real estate, and all of a sudden we've got a niche women's apparel, cosmetic, like it just didn't seem to fit there. But then I've always told myself too, and I've heard people say this, that don't fall in love with the deal, fall in love with the numbers.
All right, hello everyone, and welcome to another episode of the Jack Bosch Show, where we talk about all things finance, real estate, and entrepreneurship. And today I got Bronson Hill with me, who is actually author, best-selling author of the book Fire Yourself. Has built 2,700 apartment, well, not built, but owns 2,700 apartment units. Has done all kinds of different things. And we're going to talk about how you can fire yourselves from your job. So Bronson, I'm glad to have you here.
Thanks, man. It was great to have you on my show recently, and I love talking finance, real estate, and all the things, or the things that matter, right?
Yeah, exactly. So first of all, let's get started right away. So you wrote a book called Fire Yourself. What is it about? And in the content of explaining what the book is about, perhaps also give us a quick introduction about yourself.
Yeah, thanks so much. So I'll give an intro of myself. I'll talk about Fire Yourself. I was a well-paid medical sales professional. I was making over $200,000 a year. Wore scrubs, went into surgery, heart surgeons mostly. And, I learned a lot. There's a lot that was great. There was a lot of things I enjoyed about the job. The challenge is I didn't have control over my time. And I hear people say, I want financial freedom. And to me, financial freedom was great, but I really wanted time freedom, right? And that's the thing that a lot of professionals or business owners is that they're tied to the business, or if they don't go to work or do their procedures or aren't doing the billable hours, then they're not actually getting paid. And so that was the thing. I wanted to create more wealth without taking more of my time. So that's really where the conversation about Fire Yourself kind of started. And then I learned about, did some single family houses. For me, it wasn't really getting me to my goal as quickly as I liked. And so I learned about syndication, which is basically raising money from different investors. Fast forward now, I was able to leave my corporate job a few years ago. We've raised over 45 million. We've done, over, like I said, over 2,500 multifamily units. And the book Fire Yourself really has come from conversations I've had with over 2,500 high net worth investors. Just had interviews with them and conversations, and just really learn about, there's a lot of, like, the physician who's worth $5 million who's only done stocks and has a money person, right? Well, why would somebody consider getting into passive real estate investing or other types of deals? And so really, there's really three things that we try to help people with in our business is really cash flow, appreciation, or tax benefits. And in the book Fire Yourself, we just talk about how do you analyze a deal, or how do you analyze a deal of any asset class? So which goal are you trying to help with cash flow, which really allows you to be able to leave a job, be able to cover expenses, be able to leave your business, and be able to have cash flow coming in whether you're working or not. And so it just really opens up more opportunities for people. So, but anyway, it's been fun. We can talk more about kind of the process of analyzing deals and just what that looks like. And again, we've done a lot of different things on the investing side as well, from multifamily to private businesses to oil and gas to car washes to a lot of different things. So.
Okay, that's quite a bit of you packed a lot of stuff into a few years of activity here, so that's exciting. So give me, like, let's jump into which one of all those different asset classes you just mentioned has been your favorite one so far.
Well, I think the favorite ones, people ask this question. I actually ask this question to every investor I speak with, when we have a call. Before they get on a deal list, I say, well, what's more important to you, cash flow or appreciation? And a lot of people would say, well, kind of a mix of both, or I'm interested in this or that, or, cash. But I really believe that cash flow is far superior to appreciation, because cash flow is really, again, what allows you to, even if you have a job you love, or you have a business you love, what happens if the business changes or something happens and you become disabled, or a family member, you need to take care of them. And so cash flow allows you to be able to actually live the life you want to live. A lot of money someday with appreciation really doesn't help. So the deals that do that, and especially that's what we found right now in real estate deals the last few years, as interest rates have risen. And so if you own a single family or you own multifamily, it's hard because a lot of cash flow has kind of dried up, or it's not really there because interest costs, the interest costs are higher. And so deals that have cash flow. So I think things like oil and gas that offer some amazing tax advantages as well, and some great cash flow. Those are great deals. Or private businesses. Now we talk about the word cap rate in multifamily apartments. So that's just if you paid cash for a property, what would your percentage return be per year? And that's the cap rate, right? So if you paid $1 million and you got $50,000 a year, that'd be that'd be a cap rate of 5. Well, in private businesses that are mid-sized businesses or small businesses, we're seeing, a cap rate which could be a 30 or 35, right? So you're seeing a 7x return just in the cash. So we're buying businesses that basically out of pocket, the down payment is less money than what we're getting returned to us even after debt service in cash for year one, which is kind of crazy, right? The fact that you put less money down than what you're actually, getting in the first year of that business. So cash flow to me is the thing that really changes people's lives. It reduces risk as you get money back. And again, the sooner or the quicker, the more you can cash flow in a deal. I think those are the deals we really prefer.
Very cool. That's a good answer. So, and a lot to dive in there too, because I personally think it also depends on obviously depends on your personal situation. Like, if you got cash flow coming in through your ears and through everywhere, then appreciation becomes perhaps a little bit more significant because you pay, well, officially you pay taxes on cash flow. There's obviously a lot of ways to legally reduce the thing, like oil and gas has great tax benefits, multifamily has great tax benefits. There's lots of different ways that you can reduce your tax burden, but I would agree that particularly if you're on the path to fire yourselves from whatever you have, your job, your thing, then cash flow is the way to fire yourself. If you want to reach potentially billion-dollar status, then I think equity and growth of equity becomes a much bigger game in that picture, because probably hard to build $1 billion worth of cash flow.
Yeah.
But it might not be as, I mean, it's equally hard probably, but to build $1 billion worth of equity. But you're right. If something dramatic happens, you can't eat equity.
Yeah. And the other thing
Particularly in a
too
private
is,
company, you
well, the other
can't
thing too
eat
is,
cash flow. That
sorry to interrupt. The other thing is, the cash flow. And once you have the cash flow in place, you can go for the $1 billion business. If you don't have the cash flow in place, taking those big shots, which I think are important as well. I think it is important to have, but depending on your age and what your goals are. But and I know somebody like a friend I mentioned earlier. He's net worth hundreds of millions of dollars. He is interested in cash flow. He's in his 80s. He's interested in doing really conservative cash flow kind of things. So I think that when you have the cash flow in place, either as somebody who's not wealthy or becoming wealthy, or somebody who's very wealthy, it's amazing because it helps. And a lot of wealthy people I know would say the same, just being in a very conservative kind of cash flowing, private lending, first position note type of position is awesome. But once you have that, then it allows you to take these big shots that are, 10x, 100x, 1,000, potentially to do that. But if you don't have it in place, if that doesn't go well, you're putting a lot of eggs in that basket that may or may not happen.
That's right. And as you said, age plays a role. I mean, the cash flow is important when you start because you gotta have the cash flow to get out of, to fire yourself. But then when you're older in your 80s, let's say, you don't necessarily care if something's going to appreciate in 50 years from now, or it's something's going to be worth in the path of growth on real estate that in 30 years from now it's going to be worth $1 billion, when you most likely or quite likely might not be around for that anymore. Or it's a high risk proposition. Will it or will it not? Your time horizon, at least in your mind, gets shorter, and you go, well, I want to enjoy the fruit of my labor, so let me invest in something conservative, cash flow rich, so I can use that cash flow and just enjoy life while I still have the ability.
Yeah, it's interesting you said that too, because I think that one thing I really nerd out on is the financial side. I was a registered investment advisor for a few years, which was called an RIA. I still call myself an RIA. I'm not registered, but I'm recovering. So I'm a recovering investment advisor, right? Just because the stuff you and I do, it's like they look at it like you guys are weird and crazy, whatever. But like the thing is, like, nobody becomes wealthy typically by using these traditional methods. Like, nobody becomes wealthy. Now, you can not lose your wealth. You can hedge against inflation. You can do things, but like, it's not set up in a way, and that's where like and even that question of like someone's risk profile or their age, no one can really tell you how you should allocate or invest. And so I find it so interesting, and that's where people, so I have some older people I know are taking much more risk than what traditional advisors would say. And of course, traditional it's just a made up thing that they spend billions of dollars to try to tell you what you should do, but most people buy into it. And so that's why I love the alternative side, because it opens up just so many more options for individuals.
Yeah. Okay, so then let's go into very specific. So what is your how is your strategy, or how does your book lay out how you fire yourself? What's the premise behind the book?
Yeah, so the premise behind the book is, let's say someone makes a couple $100,000 a year, and they're able to save and invest money, and you're able to get a decent return on it. I would say a conservative decent return would be 15% per year, right? And this is from a passive standpoint. Let's say I'm working a lot of hours, and this is what I did. I was able to put some money aside, was able to work my full-time job, and I did some active things as well. But for a lot of individuals, if you are able to invest 100,000 per year, and you're able over the next 5 years to basically get or just in general, a 15% return per year. Well, in that case, if you're investing 100K each year over the next 3 years, you're already at like, $60,000 or $62,000 a year. If you do it over 5 years, you're at like 120,000 per year just in, returns that you're making. Obviously 15%, you say, well, that's maybe total returns, may not be cash flow, but it's important to figure out. I think the first thing when you're looking at firing yourself, I'll back up, is that you need to figure out what it costs for you to live. There's 3 different levels of financial freedom. The first level, which is really the fire yourself numbers, what do I need to be able to cover my expenses right now? And for some people, it's $5,000. Some people, it's 15 grand, it's 10 grand, whatever. For me, I live pretty simply. It was like $6,000 a month. I figured for $6,000 a month, I could cover housing, I could cover my insurance, I could travel a little bit. I had food. I have enough to be able to, at the bare basic, that if I wanted to leave my W-2, I could do it. Right. And I was making 200K, but I didn't need as much. So I need, 72,000 a year, not a lot of money, but I can do that. The second number is maybe replacing your current income that you're making now. And the third one is maybe the life of your dreams. What do you want to have? That jet? Do you want to have that lifestyle that's just that next level jet setter lifestyle? Then figure that out. But I think once you figure out what your number is, then you can start saying, hey, what can I do now that here's my income bucket over here? I'm paying taxes on all this and whatever. Can I start putting money into this alternative asset bucket over here and start generating some passive cash flow? So I realized that passive wealth was just way superior to active, or having to work for it, because it would grow by itself. Hopefully you buy assets that would appreciate over time. There's an inflation hedge, a lot of times built into these. If you could grow your passive income by $1,000 a month or $2,000 a month, that's huge, right? It gives you more ability. So it doesn't have to be all or nothing, but over time you build that number. And eventually, once you get to where that and I've talked to a lot of individuals that they like what they do, or maybe they don't like what they do for work or their business, but once they get to where they've replaced that income, they work is optional, right? And it's just amazing. I know other friends that don't have that in place. They've got 2 months of savings, and they literally have a job they hate and they cannot leave. Right. So having the ability to be able to fire yourself instead of being stuck at a job is really huge. So that's kind of the process that we take people through. And then in the book, we talk about kind of how you walk yourself through that process, and then just figure out what it is, what your goals are. And then, if you do want to fire yourself, what does that look like? A lot of people would like to, and how do you actually go from step one to be able to do that?
Very cool. There's a lot of concepts that you just shared that actually are in my book too, in the Forever Cash. You're actually the first person that actually finally also talks about it in that 3-step process. The thing we call that a security plan, comfort plan, and luxury plan. Awesome. Well, it's the exact same thing that you just mentioned. That, like, what is it that I need to survive, basically, to pay my basic expenses? What is it to live like a comfortable lifestyle, which is probably what you're making today? And then what is your, or perhaps a little above what you're thinking today? And what is like your luxury lifestyle needs? And break that down into actually cash per month, or cash income per month. And now the goal becomes, how do I accomplish this with passive income? How do I accomplish that? And it's a journey that you check boxes, and as you go up there. And that's exactly the premise how Michelle and I built our wealth, and how we recommend people do it. Now, one question I have for you is that 15%, it's a number I hear being thrown around by a lot of people and so on, but where do you get 15% passive income that is not a scam, because a lot of people look in the stock market. The stock market historically returned 7, 8, 9%, whatever it is. I'm not stock market guy. But where do you get 15% on the money?
Yeah. So again, we can't recommend any specific investments. There's just kind of a conversation around it. I would say in multifamily, if you look at now, again, we're not talking about it is a cumulative return. It's not necessarily all cash flow. A lot of times it's these days, 6%, 7%, kind of a certain amount. And then there's more back end. So it kind of accumulates and then you can reinvest. But there are right now, it's really unique right now. One thing that has happened, Jack, in the last few years is that right now, equity investments, which are more risky. There's more risk involved with equity than there's with debt, right? If you're the lender can come foreclose, and that's a much safer position. A lot of people understand that. But there are debt positions. For example, there's a debt fund that we're involved with that 50% loan to value, where the first position, on the only position on the note. So these are small, retail, shopping centers or warehouses or things like this. And, at first position, these notes now are paying like equity was paying a few years ago. So we're seeing, rates of pretty consistently of 12 to 15.5% on debt. And these are, paying out monthly or paying out quarterly and things like this. And so there
Is
are
that you're
investments out
buying?
there.
Is that you're buying discounted debt, or you're going in and being the first lender on a you said retail kind of place, and you only giving a 50% loan to value at a 12% interest rate?
Correct. Yeah. So we're partnered with a 25-year lender who has a lot of experience in this space. We're originating notes in this. We're putting it in a fund with these type of assets. So it's not just one person's in this one specific asset. We're diversified across a pool of these. And yeah, at first position at 50% loan to cost, it's a pretty, literally the people coming in are putting in 50% cash. And you think, well, why would somebody do that for a loan? Why would they be, getting these high rates and doing this? Well, a lot of these are kind of bridge type of things where they need a 2-year thing to come in and turn a situation around, and they have some money to put into it. And so, but if they don't pay, we basically take over and they lose, their 50% that they put in for the property, and we just take over. And we can either sell it or operate or figure out what we're going to do and find a way to be able to resell that. So it's been, again, with the history with this group, it's considered to be, it's not, I wouldn't say it's 100%. No one, every investment has risk, but as far as the spectrum, this is a much safer investment. And not all debt funds are the same, right? Having a first position note, being the only lender at such a 50 to 60% loan to value is pretty conservative.
Yeah, absolutely. It is. Yeah. Very cool. Now, you also said that you're buying, and for example, I don't know if you're at liberty to speak about that already, but you're buying some multiple 8-figure online businesses or other kind of private businesses, and you're getting those at really good valuations and good creative finance kind of situations. Now, here's the thing: 3 years or 4 years, how many years ago were you a medical sales rep?
I left it was about 3.5 years ago I left. Yeah.
3.5 years ago. Today, we're talking about oil. We're talking about multifamily, 2,700 units. We're talking about car washes. We're talking about investing in those kind of notes. We're kind of thing like, so are you doing all those things? Or are you building what? Let me just understand. Like, now you're buying a $25 million or something like that company for a certain kind of thing. Like, you can't be an expert in everything in 3.5 years. So how do you get into all of these kind of things? Perhaps it's my bigger question. And how could you tell my audience, like, if somebody says like, "Ooh, that's inspirational. I really would love to do something like I'm in medical sales, or I'm a doctor, or I'm in, I don't know, a manager here or something like that, and I want to break out. This sounds exciting, Bronson. I want to be you in a way." I mean, obviously, they can probably invest with you. That's one thing. And we'll have you share your information later on. But if somebody says, like, how in the world is that even possible? That in 3.5 years you go to 45 million thing. First of all, do you operate alone? You're part of a team. What does your structure look like? And how do you even evaluate a multi-million, 10, 8, 20, $30 million online business? How does it all work? Like, give me some background, high level background
process.
how does it even work?
Yeah, exactly. It's a great question. Now, in my book, I talk about a bit about this, that my unashamed goal is really to own everything and operate nothing, right? I don't want to be an operator in the business, right? Michael Gerber talks about, instead of working in the business, you work on the business, right? So I work a lot with partners. We have partners that, in the multifamily space that I'm a co-GP, a general partner. I'm involved in asset management, involved in the investor relations, involved in a lot of the aspects of the business. I didn't find the deal. Typically someone else is doing that. But we also have a partner now that has, 2 billion in real estate. They have in-house property management, in-house construction management. They have a lot of experience. And so basically I look at it like a passive investor when I'm getting involved. I say, well, what's the case here? What's the plus? What's the kind, talk with other investors. There's a process I walk through to vet a deal. Now, when it comes to some of these other things, once I feel like multifamily, and especially, I talk about this in the book, that it's kind of a gateway drug, right? You start with that, and then once you understand how it works, you can go to other types of deals. And it is important to look at deals with eyes wide open and just say, for two questions. One is, how will I make money? What's the business plan here? And what's the primary risk of way that you can lose money, right? And then I also ask the sponsor, and I'll share that with other people. And when I'll ask the sponsor, I'll say, well, what do you think is the primary risk of this deal? And sometimes often they'll come back with a different risk than what I had in mind, right? So they'll have something different in mind. And so I think when you look at, and if anything, Warren Buffett talks about this, maybe Warren, and I'm not Warren Buffett, but super brilliant guy, but they invest in all different types of things, right? But I think when it comes from a business, they're very similar, and investing in multifamily is a business. So, okay, what is the business plan, or what are the things here? What can go right and go wrong? And then, what we're doing now with this deal that we are purchasing in-house, this e-commerce, very high cash flow. I have a partner who's in that space, right, that I've known for a number of years, that he's been saying, hey, I want to do this, whatever. I'm kind of, well, let's wait and see. Let's wait and see. And we found just an amazing opportunity that we're really excited about. And I'm going to be.
Can you tell us about that a little bit? How is it structured?
Yeah. So this is it's a $27 million and say they sell $27 million per year. No Amazon. It's all online sales, and it's about 50% subscription based. It's cosmetics and niche women's apparel items. And then about 50% is sold through Meta ads. So ads you see on Meta and things, and there's quite a bit of spend that goes towards that. And these products are drop shipped from overseas, so that just similar to subscribe and save and kind of stuff that Amazon does, where it just shows up the same time every month. And people do this because they do a subscription base, because they get a discount, they get free shipping, and they get a discount on or free certain products for free. And so, for the way this is structured, it's $17 million to purchase this business. We're doing 4 million as a earnout from the seller. The sellers are carrying a note, so they're basically earning over the next 2 to 4 years, which keeps the owners in the deal, right? So they're going to be involved in helping us, which is always helpful whenever you buy a business, because they figuratively know where the bodies are buried. Hopefully know actually the bodies, but and then of the remaining 13 million, we're financing a little over 10 million of that. And then there's a little bit of closing costs, and we're raising $3.2 million for this one. Now, after debt service, currently the business is producing over $4 million per year in cash flow, right? So that's a great equation. It's very high cash flow. We have things for about, and by the time that, I don't know when this episode will come out, it may already be full by then, but we like the idea of cash flow investments. I like that I have a partner that's in it. Now, this deal is a little different because I am more involved in this one. I'm not, my partner's going to be running, he's going to be the CEO. I'm going to be assisting. I'm on all the bank accounts. I'm in the business as well, which also gives more control, which is a challenge if you're just putting money into different projects. And we've had some go phenomenally well. We've had some really struggle. But I think, being in a place of control can really be valuable as an investor as well. So that gives a little bit of a picture of that specific deal. And then I know you were asking, have you responded to that? Or
right. So in this particular case, let's just talk about that for a second. How did that deal happen? Who did your partner look for it? And were you you properly then brought in some advisors to structure it the right way? How do you value? I mean, I can't expect you in 3.5 years to know how to value businesses and this and this and this and that. So how did you get a comfort level that this is a good deal, other than of course the $4 million cash flow? That makes sense. But with basically only putting 3.2 million in and getting 4 out, that sounds like a good number.
It's a good equation. So I think that the biggest thing, we talk about two investments. One is the investments we make with our money, and the other is the investment we make in ourselves. Warren Buffett talks about investing in ourselves. So I read last year, read 90 books last year, read 98 books the year before that. I just, not that you don't get everything from books, but it introduces you to new concepts and new ideas, workshops, networking, going with friends, talking to people in the space, going to conferences that are based on this. So there's a lot of learning that can happen. And it's not always a linear, hey, you've been studying this for 10 years, or you went to school for this. Just like for you with land flipping, people ask, well, how did you learn this? Well, you just immerse yourself in it. And so if you're immersed in something, in a short period of time, you can learn quite a bit about something. And then also having someone who is in the space, that is an expert in the space, that is a trusted person, that has bought and sold businesses, that has been able to do this. And actually, initially, we talked about it, and we looked at a couple different things, and then he was able to source this one. And I kind of kept saying no, because I was like, well, I just don't like the niche of it, because okay, we're doing oil and gas, we're doing real estate, and all of a sudden we've got a niche women's apparel, cosmetic, like it just didn't seem to fit there. But then I've always told myself too, and I've heard people say this, that don't fall in love with the deal, fall in love with the numbers, right? If the deal itself makes sense from a business standpoint, it's less important what genre it's in, what category it's in. It's just if it really gets you where your goals are. So this was sourced through, they're brokers, just similar in the same way that there are brokers for, real estate. As far as the diligence side, we're now, my partner and I, over 6 figures in just to the diligence. There's something called a quality of earnings report, which is, tens of thousands of dollars. They look at every single piece of the financials of the business, of different parts of it. We've done website audits and, legal and, all the different things that go into just kind of understanding the nature of the business. And it's a lot. And it's literally been, 4.5 months, and we haven't even launched it to investors yet. Right. So we did get our debt in place recently, but it's just been, one piece at a time. Okay, we got this, we got this, we got this. And it's been a lot. So, but every step of the way, just like any deal you do, you have to be willing to walk if something doesn't make sense. If something doesn't check out, you got to say, okay, well, that money we put in is sunk costs, and we don't have to that's already gone. So, if we're not going to do it, we're not going to do it. So that's, I guess, the biggest thing to source this. And there are, again, brokers that focus on this type of a business. We actually like that it is less, and there's no warehouse for us to operate. There's no tangible thing, or there's a small number of employees, so it's very low overhead. But we just love the way the business is structured, because it is scalable. We can do, once we do this and we prove that we can do this to ourselves and to investors, we can do this with other similar types of deals.
Wonderful. Yes, no, I thank you. I appreciate that. I hope it didn't feel like I put you on the spot here, but
no, it's great. Yeah.
What I really heard from that is it makes sense. You're going after that, after falling deal with the numbers, not the deal. And then you basically very systematically investing in relationships more than anything. And then if you find the right relationships, you help those relationships essentially become more successful by putting your firepower behind it and becoming part of that. And that's a great strategy to build wealth. And in this particular case, you'll have an active role in there too. But again, you still had a partner that already knows those kind of things. So it's that partnership program, that partnership model, that apprenticeship, almost like in a level that you surround yourself with true experts, sometimes probably paid mentors and things like that, plus a lot of reading. And then it's execution. It's 4 months before you even bring it to the investors. A lot of people give up after 4 weeks. And then it's guys, you got to understand, if you're listening or watching to this, anything worth doing, you got to put the year behind it, right? You got to put the year behind it. When we have our coaching program, it's a year coaching program. People's why this is a year? It doesn't take me a year to do a deal. No, but it takes you a year to become a master of what you're doing, right? It doesn't take a year to get your first deal done. Ideally, that happens in 4 weeks, right? But until you got it down that it's part of your DNA and that you have learned the different kind of angles on it, takes some time, right? So anything worth doing, whenever we start something, we'll give it 18 months, 2 years. So it's okay, we do this. See you 2 years later with the fruit of it. And sometimes those fruit looks like nothing, and then hockey stick, and everyone is surprised. Oh my God, how did you do that? And that's my question to you, 3.5 years. How did you get to that? Well,
yeah,
do a whole lot of studying, a whole lot of working hard, a whole lot of finding the right partners, a whole lot of learning what they do, a whole lot of being able to understand whether those deals are good or not. Am I right on those things? And then being able to pull the trigger.
Yeah, exactly. It's it's been really helpful too. There's some sayings that Jim Rohn, motivational speaker, said. You're the average of the five people you spend the most time with. And so, having done these 2,500 interviews, I actually have my second book called Rich Brain: How the Wealthy Change Their Brain to Change Their Bank Account, which talks about the mindset and habits that wealthy people have. And I'm really excited for that. It's mostly written. I've got to just touch up a few things, but one of those things of the habits are getting around people that are 10x where you're at. So if I want to be wealthy, I've got to get in the room where I'm the least smart person in the room, right? I'm around people that just by being there, their afterthoughts are like, oh my gosh, I need to take notes on that. I mean, just it's amazing when you get around people just by association. There's so many benefits to it. And even just from, we talked earlier about my friend Ken McElroy, I did the forward to my book, right? To become a friend, and just like being around people like that, who, he has 2 billion in real estate, it just elevates me, right? And I'm sure for you as well. You have a mastermind, but you're probably in other masterminds as well, and you're just continually, we're all trying to kind of continue to have this growth journey. So I think that for anybody who wants to do what I've done, and I'm sure what you've done as well, it's getting in rooms, and a lot of us it's paying to be there, where people are doing things that are way bigger and better than what you've done. And so if that's the case, if I want to grow in my area of health, if I look at the five people around me, if they eat terribly and they don't work out and whatever, like I'm probably going to be similar to that. If I want to be, a great runner, or if I want to be, lose 30 pounds, I've got to get around those people and really start, just hanging out with them. And just by talking and having questions, like, or hire a coach or something like that to get in that space. So I think it really applies in every area. I mean, to me, it's one kind of foot in front of the other. I did take about a 20x net worth. I took about a 20x net worth jump over the 3 or 4 year period, just like my net worth went up substantially. And I think that happened. There's a mindset around that I call wealth worthiness. I can get into that. That's going to be in the book Rich Brain, but just about how seeing yourself as someone who's worthy of wealth, and kind of replacing those negative self-talk tapes with other things. And so there's a whole bunch, I see you smiling, there's a whole bunch of like personal development work on that. For most people, it happens incrementally over time, but there is a way, if you do that inner work, like you're saying, it's all of a sudden flat, and all of a sudden you get this big jump. And that happens through personal development, I believe.
Yeah, absolutely. Yeah, I'm smiling because I just had a meeting with our mastermind where we did the year planning for 2025, and I touched on a lot of these concepts, and also I just went into one of our Facebook group, Land Profit Nation, and did a video on there, so you can search for it and search for my name. For example, one of the things that has helped us tremendously is what I call the one idea concept, and the one point concept. And that basically is very simple. When I go to a mastermind, I'm often there for 2.5 days, and out of 2.5 days, for 2 days, I learn not a whole lot, because it's house flippers, and I don't do house flipping. Like they talk about construction costs and how to reduce construction costs. I don't do construction. They talk about things like that. But then all I do is all day long, I meet people and network with people, and then usually one person says at least one thing, and often it's like 10 things. Yeah. There's one idea that is like, oh, that's what I came here for, right? Yet so many people, they come to events and they're like, particularly if they already know a bunch of stuff, they're like, I didn't learn a single thing, and then they walk away and they're like, and no, I guarantee them that if they would have closely paid attention, they would have taken away one thing that, if they're properly implemented, would have made them 10x or 100x what they just paid for that ticket, or for that coaching program, or for whatever it is. And that's the same thing here. So anywhere we go, we always like, what's the one thing, even not in a failure, like, what's the one thing we learned from you? What is the one thing that is a takeaway here that we can use to profit down the road? And even 7-figure failures that we've had will turn into 8-figure wins through that, because it's a mindset thing. If you just go through life just looking at what is the one thing positive that I can take from here, and sometimes it's a personal relationship, sometimes it's just an idea and a tactic or an implementation strategy, or a tax loophole or investment strategy or things like that. your life will change. And that's the same with books. In every book, sometimes this book wasn't good. Well, I'm sure there was one thing in there. And
Yeah.
so I always look for that one thing. And sometimes it's not just one. Sometimes it's 100 things that come out of certain things.
100%, 100%. We just this is one of my favorite books. We just did a book group on this for our mastermind called The Gap and the Gain. We've read The Gap and the Gain, but it's just the idea of like, we can have a measurement of where we are to where we want to be, and that creates this kind of sense of I'm not at my ideal, and that's the gap, right? But the other measurement is to measure backwards of, oh, look at the last 5 years, look at the last month, week, year, look how far I've come, right? And that leads to joy and peace and freedom and gratitude and all these things, versus if you're only measuring, I want to get here, I want to do it, like, and I'm such a futuristic guy, I've got to kind of do that reframing quite a bit. Otherwise I can get in that mindset, that's the gap mindset.
Entrepreneurs, we all are. Yeah, that's that book is by Dan Sullivan. Dan Sullivan, my wife Michelle, co-founder of our company and chief strategist of our company. She had been in strategic coach for 11 years. So
I was for a couple of years. Yeah. That's awesome.
Yeah, it's a great program, and she's been for years with Dan himself in the mastermind. And very good book. Anyway, so with that said, thank you for being here. So how can we help you? How can people reach you? What can we do for you?
Yeah, thanks so much. I really appreciate it, Jack. It's been a joy being here. Love to be in touch. I'd love to give a gift to your audience. We talk a lot about it. This is all about investing. So I have an ebook that I wrote that it's about inflation. So we talk, inflation is 2%, 3%. I think it's actually much higher. We've seen the cost of food and gas go up 50% in the last 4 or 5 years.
I agree with that too.
Yeah, and so I have an ebook I wrote, 40 pages, called How to Use Inflation to Your Advantage. And I've been able to incorporate all these kind of alternative methods. So we talk about real estate, we talk about debt, we talk about precious metals, and just some creative strategies people I don't think have heard of. And so if you text the word inflation to 33777, we'll send you a free copy of that. That's the word inflation. You text to 33777. Happy to share that with your audience. That'll let people know about kind of what we're doing and our deals, and kind of reach out and stuff as well.
All right, wonderful. That's good. So text the word inflation. Right, if you don't know how to spell it, go Google it, to 33777. All right. Thank you very much, Bronson, for being here with us. Guys, that's a wrap. So as always, thank you very much for being here. Make sure you give us these 5-star reviews. Actually go into iTunes and give us a review, or watch it, or if you're listening to this, or watch it on Spotify, and you can review it there. Wherever you can, give us that review, share it with your friends. If on YouTube, press that subscribe button, press that bell, the notification bell. And with that said, that's a wrap. See you in the next episode. Thank you. Bye-bye.